One of the things that I've learned after thousands of conversations over the years is that wealthy people think about risk very differently than the financial industry at large does. And in this video here, I'm going to be walking through an article that I've written that talks about just some of the lessons that I've learned over the years from wealthy people directly sitting right across the table from me. I'm going to be giving my commentary and highlighting and taking some notes along the way as we go. So without further ado, let's hop into it. What I've learned about risk from wealthy clients. So one of the things I appreciate most about the work that I do is the vantage point that it gives me. Over the years, I've had thousands of conversations with business owners, professionals of various types, investors, retirees, pre-retirees, families trying to make very important financial decisions. And every situation is a little bit different. But the longer I do this, the more I realize that some of the most valuable lessons that I've learned about money did not come from textbooks, okay? They just don't necessarily come from that. There's some value in there, but there's definitely some of the most valuable, applicable ones don't come directly from a textbook. They came from people sitting right across the table from me or right across a video call from me. More specifically, they came from people who have spent decades building businesses, investing capital, raising families, navigating the setbacks that are inevitable, that are going to happen regardless of what career path you choose, and accumulating meaningful amounts of wealth. And the one thing that I've noticed is that they rarely think about risk the way the financial world teaches us to think about risk. And I'm not saying that the way that the financial world teaches us to think about risk is wrong, but it is something worth noting in terms of the vantage point that they have. So most financial conversations define risk in a very narrow way. Usually, risk is described as volatility, maybe downside, or the possibility of losing money, right? That is correct. It's not wrong, by any stretch of the imagination, it's correct, but it also isn't what I hear most often when people talk about risk applied to their own lives. What I hear is usually something a little bit deeper. I hear people trying to make sure that they don't lose control, okay? This one's a big one here, that people don't want to lose control. They value control over not having it, okay? I hear people trying to preserve flexibility. This is another one, and kind of like a common theme that you hear a lot is this whole control idea and the flexibility that control allows for someone to have. I hear people trying to avoid putting themselves in a position where they have fewer options tomorrow than they do today. They want more options than they do today in the future, right? And if I had to summarize it in a single sentence, it would be this. In my experience, wealthy clients often do not define risk primarily as losing money, okay? They don't define it primarily as that. That's a part of the equation, but that's not primarily how they're thinking of it. They're defining risk as losing freedom, okay? So people talk about having freedom, having financial freedom, all of that sort of thing. A lot of these wealthy clients that I'm speaking with already have experienced financial freedom, and what they're trying to do is make sure that they're not losing the financial freedom that they've already been able to create within their own lives. And so anyways, what I mean by this is relatively simple. Many of the people I work with have already achieved a level of financial success that allows them to think differently. And so instead of asking, how can I maximize every potential dollar, they are often asking questions like these, okay? They're asking, will I still have access to my money? What happens if an opportunity comes along? How flexible is this? What does this decision prevent me from doing later, right? That is a very different conversation. And frankly, I think it's a much more mature way to think about it as well. Much more mature way to think about risk. Many successful people are not trying to optimize every dollar in theory, okay? They're trying to build a financial structure that still works in real life. They want growth, of course, yes, they do, but they also want access and flexibility and options and the ability to act when opportunities arise. And I think that part right there is extremely important here. Another pattern I've noticed is that wealthy clients are often less concerned about whether they can do something and more concerned about whether they want to do something. So let's go back and show you this one. They're less concerned about whether they can do something, and they're way more concerned about whether they want to, okay? Can do versus want to are completely two different things, okay? And just because they can doesn't mean that they should, because they're making very intentional, purposeful decisions about how it's going to impact their lives on a day-to-day basis, not just the bottom line, okay? Now, I've had conversations with people who have the financial capacity to pursue one particular strategy, right? The math worked out, the cash flow worked out, everything checked out on paper. So mathematically, it just was perfect. But then a different question kind of emerges from that. Would this still feel wise if, for example, business slowed down next year? Okay. Would this still feel wise if my priorities changed? Would this still feel wise if I wanted more margin in my life instead of less? I've learned that capacity and comfort are not the same thing. Even a technically sound strategy can feel risky if it creates ongoing and unnecessary pressure or reduces flexibility. The people I work with aren't usually trying to maximize complexity. They're trying to build a life that still feels manageable or remain the life that they've created to be manageable. They want to keep that. Right? They don't want to add unnecessary levels of complexity into it. And at the same time, many successful people become uncomfortable when too much money is sitting idle, right? Sitting still. Not because they're reckless, okay? They're not thinking about moving it and doing all crazy stuff with it. It's not because they're trying to chase the next shiny object, but because they understand that every dollar has a job and has a purpose. If a meaningful amount of capital is going to remain liquid anyway, many people start asking the question, can this money do more for me? Can this money do more than just sitting there and growing or sitting there and not growing, right? Can this money do more than one thing is the question that I'm hearing and that people are really drawn to from the experience that I've had. Sometimes that conversation starts with a large cash balance, just kind of sitting in a traditional account, whether that's bank account or some sort of brokerage or what have you. Sometimes it's money being held in a future investment opportunity. Sometimes it's capital that's reserved for flexibility and peace of mind. Whatever the situation, the underlying question is usually the same. Can I maintain safety without sacrificing usefulness? Like, I want to have utility of the capital that I'm storing away for those opportunities that may come about, but is the utility of it going to give me more than what I've actually put into it, right? Is it serving one purpose or is it serving multiple purposes? That's kind of the way in which many of these clients that I'm working with have thought through decision making, right? That's why I've become more careful with the word, quote unquote, safe. Because for many clients, wealthy clients specifically, safe is not merely enough. They also want useful. Again, they also want utility of that capital. How much more can it do? They want capital that is protected but still working for them in the background no matter what. The conversation changes even more when family enters the picture. Now, at first, people often talk about things like growth and liquidity and protection or taxes, but if you stay in the conversation long enough, it usually becomes much more personal, okay? Right? Money isn't just about the dollars and cents, but it's about how it impacts your day-to-day, how it impacts your family and things of that nature. Because now they're thinking about their spouse, their children, their business, their legacy, right? They're thinking about what happens if something happens to themselves and whether the people they care about will inherit clarity or complexity, okay? In order for things to work well, that doesn't mean that they need to be complicated, is the moral of the story there. That's when the conversation stops being about performance alone. It becomes about stewardship and continuity and making sure that what they've built continues serving the people that they care about the most, even when they're gone. And one final lesson keeps getting reinforced for me. Most people are perfectly willing to explore new ideas. They really are, okay? Most people want to continue to grow, and if you're not growing, you're dying. That's that whole sort of thing. They're willing to ask difficult questions, and they're willing to be asked difficult questions by myself. They're willing to challenge assumptions, and they're willing for me to challenge their own assumptions as well. And they're willing to think strategically, therefore we can work collaboratively to reach a particular goal that they're trying to accomplish. They just don't want to be cornered. They don't want to feel rushed into a decision before they have clarity. Right? And one of the things that my clients see as they work with me is the simple fact that we want to get clear on what it is that you want and have a whole lot of conversation, just asking a whole lot of questions in order to gain the clarity so that I have it. Therefore, I can give the proper recommendation as an insurance advisor. Okay? And so some of the best conversations that I've had are the ones where a person visibly relaxes once they realize that they're not expected to make a decision on the spot. They simply need room to think. They need room to refine their perspective and understand the trade-offs and ultimately move from conviction, move out of conviction rather than pressure. And so it's not merely just kind of how things are going on in their brain, but what really happens in the progression is this. It's a matter of, I feel like this is the right thing to do. We have conversations, we ask a lot of questions to gather clarity, and then through the feeling and the conversations, that's justified with the mathematics, not the other way around. I hope that makes sense. And so that experience has reinforced something that I personally believe deeply, which is trust isn't built by speeding people up or rushing people into a decision. It's built by helping them to see things clearly, okay? It's helped by giving them what they want, and of course, having a very structured conversation, a clear conversation along the way. And if there's one thing that I've learned from wealthy clients, is that most aren't trying to maximize returns. They're trying to maximize their options, okay? They're trying to preserve flexibility, maintain control, and protect their freedom. And the longer I do this, the more I think that's a far more useful definition of risk rather than simply asking whether something's gonna go up or down. Okay? Because the most meaningful definition of risk is rarely the one found in a textbook. It's the one that shows up in real life. It's the one that shows up in real conversations in real life, right? And by the way, not everyone defines risk the same way either. For some people, it's about market volatility. For others, it's losing flexibility. For others, it's maybe losing peace of mind and the liquidity and all. And so if you're trying to better understand what matters most in your own situation, I've put together a short assessment that can help identify the priorities where you may want to focus on next. You can find that in the description below. So thanks for watching, and I'll see you in the next one.